Hello and welcome to FYI. Today was all about Zomato, one of the most awaited and much talked about initial public offerings in recent times. Zomato's IPO, the first Indian internet unicorn, made its stock market debut today, and Zomato shares made a strong stock market debut, closing the initial day of trade at 126 rupees per share, jumping 66% from the IPO price of 76 rupees. Now, Zomato ended the first day of trade 8% above the listing price. On opening, Zomato shares hit 20% the upper circuit at 138, nearly doubling IPO investors' money. On closing, Zomato had a market capitalization of 98,221 crores. So the mega public issue of the food tech unicorn saw a subscription of over 38 times. So this much awaited public issue is the largest to hit the Lal Street since the SBI Cards and Payment Services of 10,341 crore, that IPO way back now, at least way back in March 2020. So on FYI tonight, we have some Zomato stock owners who picked up stock, and with it, might I say, bragging rights. They're feeling mighty chuffed, I can imagine, and rightly so. Joining us, Rajesh Sawhney and Kanish Gaur, both of whom invested in the IPO, Zomato IPO. Congratulations first. So, Rajesh, though first, I want to ask you, you tweeted on August 2nd, 2020, build a company, not a startup. So, you know, in Twitter, it's always there to haunt you, Rajesh, but today you tweeted, I bought my first share of Zomato at 126 rupees, and now the accumulation starts for a decade. So which is it? How do you feel? Why did you buy the stock, and how do you feel?
Thanks, Sarah, for inviting me to this show. And I think it's very clear that startups and technology are creating the greatest value for the investors, whether in private market or public markets. We have seen in the US and the Chinese markets, when these kind of companies have listed, think of Google, think of Facebook, think of Apple listing, and they've created enormous amount of wealth over next decade or 2 decades for their shareholders. And I don't think it will be any different for Indian investors. Tech has very long legs. Tech is the greatest value creator or wealth creator in our lifetime. And I think Zomato is showing the way. It's an IPO of hope. It's an IPO which represents the aspirations of millions of millennials and also all those people who work in the tech ecosystem.
Wow, so those are strong words, and IPO of hope. So you're basically yearning for the sorts of returns that Facebook Incorporated, like you said, Alibaba, etc., all of them generated. As Dipinder Goyal himself said, that, you know, history is made in hindsight. So let's see. But Kanish Gaur, how do you feel? Because investors like you are bragging on Twitter about snagging shares in the startup. You've invested before in IPOs. You have stock market experience. What was your experience like picking up Zomato stocks?
So it's a completely different experience. First time you're seeing an Indian tech startup, you know, taking the market by storm. And I would say the storm has just started. There is more to come. There are more companies. There is Paytm, which is going to come. There's going to be Ola. And Zomato has just set up the precedents for Indian startups to scale at a global level. And it is not just a win for Zomato, but all the restaurants which went offline, and Zomato has taken them online today. So Zomato is not only powering online businesses, it's also powering offline businesses. So it's creating entrepreneurship. It's creating an ecosystem for growth. During the pandemic, you know, how many of us were in lockdown, and Zomato turned it around and ensured a lot of people get food. So it's changed, right? Last time we experienced something like this with SBI cards. But I think Zomato has much more to offer with the way it is going and the way it has shaped up its business model, looking at both inorganic and organic growth. The way, you know, I think this is going to stay for longer, and we will see more acquisitions happening. You know, with this kind of listing, you would see that Zomato would going out and investing in other companies as well, and also acquiring a lot of companies. So wait and watch, more is to come.
More is to come, and perhaps that's why we saw the kind of frenzy we did today for everyone trying to pick up this Zomato stock. Investors like Guru Dutt. Guru joins us. Guru, you didn't unfortunately manage to get stock. Is that correct? And is it true that you had applied for 6 of your family members, you really wanted to get Zomato. Why is that?
Yeah, I applied for my wife, for myself, for my younger brother, for his fiance, for my father, and for my brother-in-law as well. So luckily, 3 of those got the IPOs, but for me, unluckily, I missed out on that front. But I've been pretty lucky. I've applied to near about 25 such IPOs, and I got allotment in near about 9 IPOs, including DMart, which has been a big gainer for me in my portfolio basically. But I have started I'm now it has gone up a little bit more since the IPO price, right, Zomato. So I'm considering what would be the fair value of the stock at this point of time, and I may go ahead and invest some more.
So you do plan to? You do?
Yeah.
But what is your, clearly there's the FOMO factor also doing the rounds, but what was your takeaway from this? Because as Kanish pointed out, we have Paytm, Oyo Hotels, all of them, there's, whole set of Indian startups that are set to enter the markets. Do you have a plan? Folks like you who may not have gotten their allotted slots today, do you feel burned or do you feel more incentivized going forward?
No, I think there are a lot of good companies again coming, like Policy Bazaar, Inder already mentioned, few of the more IPOs are also coming in line. Paytm is there. So I think for me, it has gone up a bit more. I was expecting it to list around in the range of 90 to 100 because the grey premium was going on in the range of 20%, 25 odd percent. Okay. But now I'll probably wait and watch for a quarter or so, then probably I'll pick up the stake. Yeah.
All right. Do we have Rishabh Malik?
Yes.
Okay, so Rishabh also invested. Thanks, Guru, and all the best for your future investments. Like you say, you're not disillusioned or dissatisfied by this. You're just going to keep going strong. Think, evaluate, and then keep buying. Rishabh Malik also managed to invest. So Rishabh, we had last week Dipender Goyal. He was tweeting about stress eating, and he also had that teeth clenched emoji on his Twitter account. What about you? What was the day like for investors like you? Okay, we don't have Rishabh, so let me ask either Kanish or Rajesh. Rajesh, any jitters today?
No, not at all. I think it's the beginning, and as Guru also said, I will be buying on every dip. I think stock will settle down. There is an initial euphoria today that we saw. This stock has long inning. I think it will be a choppy stock also. Stock markets go up and down. It'll offer to investors a lot of opportunities to get into this stock. That's my feeling, and I will be certainly building a position in this stock. And I'm not going to sell anything. I'm just going to accumulate for next 10 years. This is a 20-year story.
This is a 20-year story. Okay, maybe one day we'll rewind to this show just like we rewound to your tweet from 2020. So we do have Rishabh back on. Rishabh, what was your experience like?
Yeah, I was a little disappointed to not get an allocation in the IPO, but very excited to see the pop on the stock this morning. And like Rajesh, I was able to buy some shares on the public market. As Rajesh said, I'm very, very long on the India food tech opportunity. I think whether it's early investors and venture capital firms that invested during the growth of the business that still continue to hold their shares in the company, I think this is a 10-year story, and we're going to see Zomato not only dominate food delivery, but also move into other categories like we've seen in terms of some of the strategic investments they've made in groceries and other categories.
Okay, let's get in Amrish Baliga and K. Ganesh. Both are stock market experts, serial entrepreneurs, promoters, investors joining us. So Amrish, you hear Rishabh here, you hear Rajesh saying, this is it's going to be a long story, and they're all thinking long. But the fact is that Zomato's debut also comes, there are those investor concerns that the India market is a bubble that's waiting to burst, right? And valuations have outstripped the fundamentals. What would you say to this, Amrish?
No, I mean, that's what I've been saying for a while, but then this is liquidity driven, and as long as liquidity is chasing stocks, it's a question of demand supply. And despite such a large IPO of 9,000 crores plus, I mean, a stock which moves up, say about another 40-50% from its IPO price, that clearly shows that there's enough demand for this stock. But that doesn't mean that the fundamentals are excellent, because if you look at the Nifty price earning ratio for FY21, that's about 30x. Say, I mean, if you're earning, 100 rupees as your net profit, then 30x is the valuation in the market. But in case of Zomato, there is nothing called PE, because there is no net earning; it's a net loss. So people are looking at the revenue.
Correct.
And that to the valuation at 1 lakh crores, where it touched in the morning. 1 lakh crore means 50 times its revenues. Revenue is 2,000 crores last year. It is 50 times.
Yeah.
It's just mind-boggling.
So then what should investors do now, K. Ganesh? Because as Ambrish points out, the stock crossed the 1 lakh crore mark on listing day. So what do? Do they buy, sell or hold? And for those who missed the allotment, should they buy now in the secondary market? Ganesh? Okay, we don't have K. Ganesh yet. Then Ambrish, what would you say? Buy, sell or hold?
If someone has bought it, then at least I think they should exit at least 50%, make most of their shares free, and then I suppose you can speculate. But then I think it's a great opportunity for people who had, possibly bought it in the IPO. I missed out because I had said, I'll not apply for the IPO because it does not fit into my model, where I need to see some profits. But then those who have bought it, it's a lost opportunity for me, no doubt. But then those who have bought it, I would suggest that utilize these profits which you have got, book at least some profits and take it home. Because this is not the first time we have seen such fads. In the last 30 years, I've seen NBFC boom, I've seen a mini cement boom, I've seen mini steel boom. Most of those companies are not there anywhere right now. Out of those hundreds of mini cement and mini steel plants, there are just possibly 3 or 4 which have become large. So I really don't know as to where Zomato would be, say, 10 years, 15 years down the line. But then unless they are not growing at that 50 to 80% every year, it is very difficult to justify as to why we are paying this sort of a valuation. And secondly, we should realize that there are only 2 leaders in this sector right now, Swiggy and Zomato. Both having about 43 and 47% sort of market share. And now you are having Amazon coming into that space, and Amazon has deep pockets. What happens tomorrow if Amazon grows big and both Swiggy and Zomato lose market share? How will the markets look at that? Number 2, their main partners are restaurants, and restaurants are completely up against them, saying that the commissions are too high. They want to set up their own platform. They already set up their own platform. I don't know whether that will be successful or not. But all these are those risk factors which are there. And the other thing which most of us are forgetting is that when the PE investors were there, possibly the pressure was not quarter to quarter. Today you're listed and you'll be watched quarter to quarter. Unless you're performing quarter to quarter, it'll be very difficult for the price to hold. So with all these pressures, how do you perform?
So, and also the fact that these Indian startups, many of them who have also announced plans that they're going to enter the market, go IPO this year, they are attracting billions of dollars in investment, even though many are yet to make a profit. Rajesh Sania, I could see you wanted to respond over there. Adding to that, if I could just add to some of the reasons that Ambrish pointed out, maybe because I didn't buy and I don't own Zomato stocks, that, it's a pandemic year. That's why we got Zomato and companies like Zomato and Swiggy got such a huge push. Quickly respond what you wanted to say to Ambrish.
Yeah, definitely. So look, I sit on the board of IndiaMart. IndiaMart listed in 2019 and has given 700% returns, right? Of course, it's profitable and it continues to grow strongly. Similarly, InfoEdge, which listed about a decade back, has given phenomenal returns to its investors. You see, the certain categories of internet, such as food, marketplaces categories, take little longer time to give profits. And that's where investors will have to be little more patient and long-term in nature. And, if you look at Indian history, even Coke took 20 years to make profits here, right? But they eventually created a franchise. And eventually internet markets and most of marketplace markets are winners take all market. So in this category, there is definitely a duopoly which is playing out, Zomato and Swiggy, and the pendulum is shifting. But together, I think they are creating a very good franchise. And this franchise, as Rishabh also said, can be leveraged in many, many ways. So there is a lot of leg room for both Swiggy and Zomato to grow. We are just 10 million e-commerce buyers today. It could easily be 200 million in next 5 years. That is the growth potential that both of these companies are looking at. And economies of scale can tip the profitability very, very fast. Once you hit that 50 million mark, then both these platforms will become hugely cash generative.
So it's all about economies of scale right now, not particularly.
Totally. I think at this point of time, the bet is on their growth, and bet is on these two coming and creating huge economies of scale.
Even though they're not making profits right now, they're bound to grow. Okay, we have Narendra Singh also who does join us now. Naren, good to have you on the show. You're an IT software engineer by profession. You're a new investor, you say, to this, and you were hoping to get a subscription, but that didn't happen. Why did you want Zomato so bad?
Yes, Sarah. Thank you for quickly introducing me with the panel. So actually, I have heard a lot of good news about the Zomatos these days, about its market and what kind of service they are offering in the India market. So everyone is talking about Zomato share. I just wanted to, spend some amount into the share market. So I thought that it could be a very good starting to invest with the IPO. And but finally today I purchased some share. And just hoping that I can make some profit out of it, and very excited for this.
Well, congratulations. So I got it wrong. Like Rishabh, you didn't get the original IPO allotment, Zomato's allotment, but you did manage to pick up today. So what do stock owners now, like Narendra, do? Should he hold on? Should he sell? Should he wait? Let's go in for a short break. We'll come back and ask all our panelists just that. Welcome back on FYI, and FYI, here's a little fact. At the end of this day, Dipinder Goyal's stake in Zomato is now worth more than $700 million. That's the CEO, Dipinder Goyal, who owns about 5.5% stake in the company. And Zomato's IPO testing the appetite for India's new tech generation. We still have with us Amrish Baliga, stock market expert and investor, and K. Ganesh, serial entrepreneur, promoter of Big Basket, Portia Medical, Fresh Menu. Ganesh, we missed you in the first half of the show, but the question we had for investors watching, if they manage to pick up stock, what would you advise them to do? Buy, sell, or hold?
I am not a market operator. I don't deal in public markets, so I'm not the best person to answer. Maybe the market experts are the better person to answer. Okay. But I would say this. But I would say from the macro and from the global perspective, this is the age of technology. The kind of consumer behavior change the pandemic has brought about, the change that smartphone and low-cost internet has brought about, is all the more promising for a country like India. We have catapulted the total addressable market, adoption of new way of consuming products and services. We have accelerated by 5 to 10 years. Just look at the examples of US and China or UK. A company like DoorDash, for example, is valued close to $60 billion. Meituan in China is valued at $200 billion. And UK's Deliveroo is valued at around $7 to $8 billion. And the analysts there are saying that it is underpenetrated, there is huge potential upside. Here in India, it is 100 times true. So you are entering a stock, you are at a situation where the upside and the growth potential of platforms such as Zomato is phenomenal. So my suggestion is not specific to Zomato as a stock, but this new age tech stocks which are typically high growth, loss making stocks that are coming into IPO. Take it now. You will see in 5 to 10 years these form a substantial chunk of your Sensex or Nifty, like it has happened in the US. If you see US stock S&P, more than 40 to 50% is contributed by tech stocks. So people have gained, the retail investors have benefited from the value creation here. Here for the first time the opportunity is coming. It is very early stage, headroom for growth is phenomenal, so hold on is the general view. Specific stock, unfortunately the price depends on demand, supply, what is happening today, day to day. I am not expert at all, I don't hold public stocks, I play in the private equity and venture capital market.
Well, Ganesh, I think the fact that you don't, you're not an investor, you're not a player in the markets, and yet you're saying this, I think that holds a lot of value. Thank you both for joining us. You know, India's economy has taken a battering during the pandemic, recording our worst annual recession since independence in 1947. But the startup sector really has been this rare, bright spot. And as Deepinder Goyal said, history is always made in hindsight. So let's see if our stock owners like Rajesh Sani, who are yearning for the sort of returns that Facebook, Alibaba Group Holdings, etc. generated, will turn out to be right. But for tonight, certainly there are many celebrating, and it's congratulations to all of you. That's it on FYI.